Today's video is a step-by-step strategy on how to trade breakouts. I'm going to give you the easy way to do it, so stay tuned and learn how. All right, so take a look at this. This is a USD Swiss, and it really doesn't matter what chart you're looking at, and it also doesn't matter about what time frame either. However, it's important to know a few simple things. So I'm going to just outline this here on step by step. This is actually a 5-minute chart, and I did this so that we could get a lot of examples built in, but you can actually do this on every time frame. If you've watched any of my videos, you know I do like some of the lower time frames. So these lines here that you can see in the middle, and then this one here, this is the daily break. So when the price gets over here, it'll be a new day on the daily candle, and this was everything over here was yesterday, which would have been it's Wednesday, which would have been Tuesday. Everything over here was Monday. Okay, so we got these 3 daily breaks. And so one of the things you can do is draw trend lines to determine what you want to break out of, right? So you can do trend line breaks like this. You see we have the trend line when the price broke. You'd put your entry there, and you'd play that. You could do a horizontal line for a horizontal break. And so those are the 2 main types of breakouts. You can do horizontal breakouts or trend line breakouts. And so first we'll go ahead and take a look at the horizontal. So that's the first thing you have to determine, is what kind of breakouts. And the next thing you got to determine is what is breaking out. Okay? What are you trying to look at a breakout? So in this case, this is a 5-minute chart, but we know that this particular range has been holding for about a day, because here was yesterday. It tried to break out, and then this was a fake breakout. Fake breakouts happen all the time, as well as breakouts. They both happen. The secret to being successful is trading a specific strategy over and over again, so you know what kind of breakouts work and what kind don't, and which ones work better. So one thing that I like is when a breakout breaks out the second time, then try to take that one. So you could have taken this first one, and that would be fine, and as long as you keep a nice tight stop, you're not going to lose a lot of money. But then now if it makes a second breakout, you know that the market couldn't push through this first one, but now it really wants to go on this second one. It touched it, didn't make it, and if it takes this one, then that is a clue that the breakout will be a little stronger because the first one didn't make it. Now, that's not anything that you can rely on and say, oh, well, Casey said this, so it must work all the time. That's actually not accurate at all. But it's just another factor that you can consider. The thing that I really want to hammer home, if you're going to hammer anything home, is to realize that no matter how good your filters are, no matter how good of experience you have in trading, you're going to experience fake breakouts. There's really no way to eliminate that completely. So, what is the way to make sure that you are profitable in your breakout trades? The best way to do it is to make sure that when you do get a good break, that you allow the trade to move far enough so that it gives you a larger winner. So for example, if you can allow your trades to hit for a 100 pip target when you're taking a 50 pip stop loss, that means you can still get faked out 35 to 40% of the time and still make money on your breakout strategy. And then as you're learning and you're progressing and you're getting better and better at taking these breakouts, then you can tweak some things on the entry. You can find some patterns that work a little bit better. But ultimately, the main thing you're going to do is just draw the line and wait for the price to break out. So in this situation, you could see it attempted to make a move. And the way that I would trade this is if this price comes up and we break this level, okay, then I would put my stop loss right here. I got a little dot here. I would put my stop loss and right here. And so that would mean that I would have only a 20 pip stop. And that means if I targeted 100 points, it would be a 4-to-1 risk to reward, and I could lose over about 25% of my trades and still make money. So that's ultimately, my experience, the best way to trade breakouts is to allow the winners to move. And you can always move your stop loss. Once you're up 50 points, you can move your stop loss to break even to help make sure that a winning trade doesn't turn into a loser. That's always nice. I've actually done that recently in my live trading challenge. If you haven't seen that, just check in the mornings because I'm trading live. I'm doing 20 trades in front of everybody, and I'm on trade number 11 right now, and I have locked in some profit, and so that's totally fine to do. So the first, as I said, the first point is to identify the level, and so in this case, here is a current high, and this is a 5-minute chart, so if we look at it on a daily time frame, you can see. Let me zoom up. You can see that this daily candle has not been broken. Well, we know that when daily candles break, sometimes they really move very well. Look at this one. If we would have traded this breakout right up here, see where this line, let me draw this line, okay? Do you see this move? It broke, right? But then it retested. So we might have been able to get 45 pips on that, but then it retested the same level, and then from the retest, it really took off another 600 and some pips. So for this particular trade, we could have put our stop loss about 15 pips, let it go back, retest, and we could have actually made 600 and some pips on a 15 pip trade. And a lot of people think that's crazy and you're going to get stopped out a lot. And it's true. It's very difficult because your timing has to be perfect. You have to be there right on time. But if you are aware of what type of opportunities the market can give you, then you can capitalize if you're looking for them in advance and if that's what you're trying to accomplish. I look at it as target practice. You're only going to hit what you're aiming at. You're not going to hit something that you're not trying to get. So if you're trying to win 20 pip trades, you're going to win 20 pip trades. But if you're trying to win 500 pip trades, you're going to hit 500 pip trades. You might not hit them all the time, but you will hit them if that's what you're aiming for. So in this situation, we had no idea that it was going to go down this far, but we could have allowed it with a trailing stop to go as far as we possibly can, because you never know when the market's going to stop. So on a daily breakout like that, here's another one we can look at. This one happened right here. This is nowhere near this move, but it's still a really good move. Look, you could put a really tight stop in here, okay? And then look how far it moved. This moved 180 points. And if you were waiting for the next downward breakout, there was one that happened here. This one would have been a fake break, right? So I always like to look at winning trades and losing. I don't want to just look at all the winners. Sometimes we become so blind by just looking at the winners that we miss the obvious things right in front of us. I've seen people backtest strategies manually, and they miss all of the losing trades because they're only focused on the winners. Right? Focus on the possibility that you can win and can lose, and then realize that it's a very real possibility either way, and plan what's going to happen if it's a losing trade, what's going to happen if it's a winning trade, what am I looking for? So basically on a daily breakout, you just identify the level. So for today's trade, we could actually say, okay, this is the USD Swiss. If it breaks above this level right here, I just drew it in. That was yesterday's. If it breaks above, I take the trade. And where you put your stop loss is totally up to your risk management parameters. But if you wanted to do it on daily, it would be 100 pips. But if we drop down to a 5-minute, we could say, oh, let's get 20 pips. And if it's me, I know what I'm going to do. I'm going to do a 20 pip stop because I would rather hit a 20 pip stop and a 200 pip target, which is a 10 to 1. I'd rather hit a 10 to 1 than if I did my 2 to 1, well, then it's only a 2 to 1. What would you rather have, a 21 or a 10 to 1? The amount of money that you would return on that is much greater. And there's always a drawback for going on these types of trades, and that drawback is that you're going to lose more trades, and that's the reality of the situation. But if your timing's right and you play it well, you can get those bigger wins. You can get a 20 to 1, and that's what I'm looking for. So basically on a daily, you just wait for the price to break out. You look at the most logical place to put your stop loss, and then once you do that, you then get to a certain level that you determine ahead of time when you're going to move your stop loss. Me, when I'm at 3 to 1, I might move it to break even. When I'm at 4 to 1, I'll lock in 1. I'll lock in 1, which would be 20 pips. I'd lock in 20. When I get to 5 to 1, I might lock in 40, and so on as the trade progresses. And so that's pretty much it. Let's go ahead and take a look at the triangles, or at the slanted breakouts. Very similar scenario, and you can trade both or you can pick one. It doesn't really matter. The market will give you whatever one you want. But look at this. Here's another one. So this was a fake break. You would have lost. This was a real break right here. And if you were trading the dailies, you would have got in a little bit sooner on the horizontal, but you could have waited for this breakout and done just as well. A really good move. And then for this horizontal, you just draw the horizontal in like that. Very nice breakout. This one would have got in a little bit close, a little bit earlier, but very close to the horizontal breakout. And so it's just basically on what your preference is and what you're looking at, depending on what kind of breakout you want to trade. But ultimately, this is very similar to the trend line trading strategy I mentioned last week, and you can go back and watch that as well. Trend lines, horizontal lines, they're all breakouts, and they all work really well. But again, once you're in the trade, it's a 50-50. You never know if you're going to win or lose. You're just going to follow the market and let the market give you what it's going to give you. Don't try to force it. Always follow your risk management. And again, this isn't trade advice, or this is just educational purposes only. Everything is always just for education only, because it takes a lot of training and experience in order to do these things successfully. And I know that those of you that are watching, that you guys can do it because you're watching and you have the desire to do it. Just make sure that you're willing to pay the price, which is the hard work, the work on the discipline. Those are the things that you're going to need to be successful long term. Okay, well, that's it for today's video. Hopefully it was really helpful. Leave a comment if you enjoyed today's training. If you have any questions, leave a comment as well. Thank you, and we'll see you soon.